Hello, welcome everybody to our Founders Spotlight series. We're here today with Brian from Glider, and I'm hoping that it's going to be a very fun episode. We're going to have fun together as well as learn a lot about you personally and about Glider, obviously. So, welcome, Brian. How are you?
Good, good. It's been a super busy week, so I'm just excited to be here and chatting with you.
All right, cool. So, before we dive into what Glider is and how it works, I usually like to know about you personally and then what brought you to crypto. I do have some information here, like showing that you're one of the OGs, like back in 2015. So I relate to the period where there were no dexes, no sexes. We had to kind of interact peer to peer. Tell us about like that journey.
Yeah. I guess I have a bit of a interesting introduction to crypto. So in 2014, MIT, where I went to undergrad, did an experiment where they gave everybody a third of a Bitcoin. And this was so early, and they wanted to see what people would do with it. And again, remember, like this is over 10 years ago. And there was nothing you could do with it. That's the irony of the experiment. It's like, what are people going to figure out and do with this? And I had a Circle account for custody, and I tweeted about it recently. I still have the email, like back in 2014, like you've received 0.333 Bitcoin or whatever. And yeah, I don't know what came of that experiment ultimately, but that was the start of a lot of, I would say, interest in crypto for not just me, but other people at like MIT as well. And so in the early days for me, like Coinbase had an exchange called GDAX. GDAX was the predecessor to Coinbase Pro. It was actually still very similar looking to Coinbase Pro, if you're familiar with that. And I was trading there through my time in undergrad. And um, I don't know, I remember trading Ethereum at like $40 and Bitcoin at like, what was it, like $300. Like it was such a different time. And I never thought like it would be this whole massive industry 10 years later. And so that was really how I got into it. Of course, I did a lot during the like NFT balloon of things in the early like 2020 2021 era. Didn't really dabble with Solana NFTs, but of course was like familiar with Solana and had a Phantom wallet very early on. So it's been a long journey. I would say I've seen the trajectory from like gas wars and like the fear of like being unsure if your like MetaMask transaction went through because it would take so long on L1s. Like it was a very scary time. You'd be like, did that work? Like, and yeah, I don't know. It's cool to see where we are today. Like user experience is still not, I would say, like on par with Web 2, but it's getting there, and we're very much building towards that with what we do at Glider.
Yeah, I fully relate to that. I remember the days where we were all wondering, what can I do with my Bitcoin? We were looking for ways to spend the Bitcoin, and I spent Bitcoin on stupid things on BitcoinTalk.org back then, like cables and all kinds of stuff. If I had to roll back the time machine, I would just hold, honestly. I
Honestly,
spent
right?
so many BTC on stupid things, but that's life. We couldn't tell that. I first like my first Bitcoin I bought was $13. And when it got to 200, I was like, I have to sell everything. I have to get rid of it. It's not gonna go higher than that. And then obviously history is like showed me that I was completely wrong. But that's how like I think most of the OGs feel, except the ones who held strong. Those are I don't know where they are today, but kudos to them. Um, you started obviously you got actually introduced to Bitcoin very early, but you still had a TradFi career before the DeFi one. Can you tell us a little bit more about that and how that transitioned into DeFi, or at least prepared you for DeFi?
Yeah, I started my career on Wall Street in New York, where I am still. Sorry if you hear the little dog in the background;
All
he's right
good, all good.
there. But I started my career at Morgan Stanley, and I worked on their rates desk, trading treasuries. I like to call this, and many people have heard me speak in the past. Like I like to call this Wolf of Wall Street without the fun. And so it was like you would sit there and you'd pick up the phone and you'd be like, I need to buy $200 million of this bond. And you'd be like, all right, like you'd find the price and you'd be like, okay, that this is the price, and you'd get it done. Um, that's not the way that the future exists. Like nobody's picking up phones. I mean, sure, these were really big trades. Like again, very frequently, like trading hundreds of millions of dollars of bonds, like over the phone, and that I think is unique to big banks. But it's not the future. It's not the future. And so I had worked at some trading firms during my time in college and realized that like I was a much better fit for a trading firm than I was to a big bank and putting a suit on every day and getting down to the office at 6 a.m. in the morning. And so I left Morgan Stanley to join a company called XTX. XTX is a super secretive trading firm. They trade every market around the world. US equities, European equities, like equities in India, South Africa, Brazil, Japan, China, like all over the place. And then also futures. And we dabbled a little bit in crypto. And so like this was 2019, 2021 that I was there. So it was still pretty early in crypto time. But we were trading on some centralized exchanges there. What I will say though, like through all of this is that when you work in traditional finance and you know like what traditional finance structures are like, not only on like market structure, but like how they work, I think it bodes you really well for coming into crypto and sort of knowing where things are going to go. Like market structure in crypto is really nascent, like really, really, really sort of like in like the dog days of like equities, let's call it. And so it's very clear where that path is going to evolve if you've seen it already from the traditional finance side. I also like to say that like people in DeFi make up all these terms that have already existed in traditional finance, and they think they're like super cool and this is the next hot thing. But in reality, like that's already existed for many, many decades. Like, a simple example, like cow swap, if you're familiar with cow swap and how they do batch auctions, like batch auctions have existed forever on Wall Street. This is nothing new, right? Like prop AMMs on Solana are really just a different flavor of single dealer platforms that exist in traditional finance. So none of this stuff is new. Let's put it that way. Like crypto maybe has different names for it. And if you come from that TradFi background and you can lean into the DeFi side of things, I think you're in a really good place to make some actual like positive change and ultimately reward users. Like we're here to like make sure users in retail get the best investing experience, and traditional finance is a very good experience for traditional investors, but Web3 I would say is not quite there. We can do more. So yeah.
I agree with that vision. We tend to think that we're inventing or reinventing the wheel in DeFi, but we're just like kind of decentralizing stuff that exists in TradFi. That's how I would frame it in the end, which I think is the way it should be, because we cannot really invent new things and get rid of TradFi. I believe strongly in the DeFi mullet theory, where like front end is like TradFi, or at least TradFi like, and the back end is DeFi, which automates things, makes them like really cleaner, faster, cheaper, everything, right? So that's I think where we're going. We've seen quite like a few bold theses, or at least bold statements from you. One of them is like ETFs are dead, a few months or years back. Can you like take us through that? Because it's kind of, we're seeing it today, if we can say it. Like obviously, the past few days and weeks have been really bad for everybody, especially for ETFs. Like we've seen outflows really like outperforming inflows. So why did you say that back then?
Yeah. I mean, like outside of price action, right? If we think about what an ETF is, it's a wrapper around either a basket of assets or a single one. And so like for anybody who's in crypto, I've always wondered, like, why would you buy the Bitcoin ETF or Ethereum ETF if you can just go on to Coinbase and buy the exact same asset and pay no fees, right? Or like, a trading fee, but no holding fees. Like all of these ETFs in crypto right now charge exorbitant fees. Insofar that like, you know, these ETFs have been the most profitable ETFs ever for some of these firms. Like BlackRock's Bitcoin ETF has been super profitable. But the irony is like you don't need to pay those fees. So To one extent, that's why I think like crypto ETFs are sort of passe and will sort of evolve to more a self-custodial nature. Like even the biggest investors in the world, the VCs, the hedge funds, they all know they're not holding the ETF, right? They're going to hold the underlying assets. What's a little bit deeper, perhaps, about ETFs, though, in general, is that there's no reason these days to wrap a bunch of things into a single asset. And what I mean by that is, like, if you want to hold the Mag 7, the biggest 7 stocks, tech stocks in the world, right? You can buy those underlying 7 stocks and hold them as opposed to buying the ETF. And with that, you get the voting rights, you get the dividends. When it comes to crypto, you might be able to lend them or stake them, right? There's all this utility that you get when you directly own the underlying asset. And that's what we're missing. And in fact, you actually already see this in traditional finance. Lots of people are talking about direct indexing, and a lot of these newer fintechs are doing direct indexing where you can, tax optimize by holding the underlying, and they'll do it all for you magically, which is nice. Like if you've been to like Public, for example, they've had a bunch of ads on this where you can, tax optimize by holding the underlying assets, and you can type into a box like, I want to hold aerospace assets, and it'll compose that direct indexed ETF for you. That's really cool, but it's not on chain. And when you think about what you get on chain, you get the lending, the staking, the governance, the real stuff that you don't get when you hold these assets off chain. And so all of this to say is like, yeah, you see it on traditional finance. It's already happening. Like ETFs don't need to be wrapped. I think maybe the counterpoint to that is if it's 500 stocks, like the S&P 500, sure, you probably don't want to buy 500 stocks. But for a lot of these, like, 50 stocks, 30 stocks, 10 single asset stocks, like gold and things like that, like, maybe gold is not a good example either because holding physical gold is a lot harder than holding an ETF. But when you think about crypto, holding digital currency is easier than holding an ETF at times. So yeah, so all this to say is like holding your underlying assets is really important, and it will be increasingly important in the future. ETFs don't allow you to do that, so you should think closely about whether or not you want to hold the underlying.
Okay. I tend to kind of usually I always agree with my guests on the podcast, but I would like to disagree slightly on one point, which is accessibility. And I think it's a good segue to the next few questions. Because before the ETFs, like the normies did not have access to crypto assets, right? Like you tell them download a wallet and do this and do that, and they're like they freak out. Even like having a Coinbase or a Binance or an FTX account was something super complicated and risky for them, and for a good reason, obviously, because of FTX. So ETFs kind of gave them that access, although like through the wrapper, and like the BlackRocks of this world are the ones benefiting from it. But those who wanted to access it and didn't want to take the risk of having a wallet or a ledger or anything like that, at least they got that access. I fully agree with the fact that holding the actual asset is much better. But for my mom, for example, it's just like her 401k. She can just say, I'm going to put 10% of it into Bitcoin. That's almost the only way, right, for now.
I'll counter your counter. So I would argue that the vast majority of inflows into the ETF are from institutions. For institutions, accessibility is a big problem because if you're an institution, you have the rails already set up to buy stocks and things for that for your clients from a wealth manager. You're not set up for a direct custody ownership, right? Like you could go create a Coinbase Prime account or an Anchorage account where I worked, but that is really hard. For the retail user, though, I would say it's actually as accessible in my mind. Like you could still go make a Robinhood account or a Coinbase account. So I think the retail side, accessibility, not such a big deal. I would say on the institutional side, though, like it has not been solved, and that's why you have seen these massive inflows of institutions and like RIAs buying into Bitcoin and ETH because they can't do the underlying legally per regulatory reasons, or it takes too long, it's too much effort. And so I think that's a bit of like near-term arbitrage. I think in the long term, they will be able to hold the underlying, but we haven't seen that yet on the institutional side. Yeah.
Agree, agree. There are so many different problems for an institution to hold actual Bitcoin in a wallet, especially like who has that secret key, who has access to that. If that person leaves, what do we do? Like that's all kinds of like very complicated questions to answer. And that ties back to something we know, we've been knowing for years, which is how broken the UX experience is in DeFi in our industry. We've been through that like super scary bridging where like you send your tokens and you're waiting for hours, hoping that you show up on the other side, or like using escrow services on bitcointalk.org, right, to buy something. So let's dive into that aspect. So tell us how you see that and like what kind of solutions you see, or at least you're trying to bring to the table from like a user experience perspective and crypto in general or in DeFi more specifically.
Yeah. I mean, look, over the past, let's call it 5 years, we've seen infrastructure on the crypto side really blossom. There's been a lot of investment into it. And now we're at the point, at least we believe, where you can actually build really cool applications that abstract away those complexities. So, like, there are the obvious ones, like gas. Like, when you use Glider, for example, you don't have to think about gas because we've abstracted it away, right? We pay for it for all of our users, and that's a really nice experience. Gas is typically fine on a single chain, but once you start to think about I'm on 5 different chains, managing 5 different gas tokens is an absolute pain in the butt. Like, how many times have you been to like you've made a new wallet and you sent USDC to it, and you're like, oh crap, I need ETH or Sol there, because I can't do anything until I have that, and then you got to send a second one. Like, happens all the time, and that's something that's unacceptable because if you're not in crypto, that's a lot of friction, and then you have to learn what that means. Like, there's too many steps. So gas is like one thing that's like super. Like, the infrastructure is there. We've hidden it away, which is great. A lot of things around signing. When it comes to these like pop-ups that you get from MetaMask and Phantom, a lot of us just ignore it, right? We're using Uniswap or we're using Jupiter or we're using Morpho. Like, we don't actually even need that, right? Like that idea that we like want to like. How many of you actually scroll through that and read the thing? Like, almost nobody. And so that's really kind of like a silly experience. Like, why do we have this pop up when, I trust the front end? I would say it's also very crypto native to think that I'm going to go and like dig through the call data and make sure it's correct. That's just not the way that a normal person's ever going to interact on chain. They don't have the time or like, also they trust the systems that they're using, right? Like they get onto a website, they're like, okay, I know friends who use this. I know like the investors. I know there are real people behind this. Like that is important. Building trusted user experiences builds that like foundation with people to think that they can use the system safely. And then of course the thing that we all hate is bridging. Bridging is just like why do we need to think about the chain? Why is it like so difficult? Why is it a new bridge or a new provider that we have to think about when we want to go from chain A to chain B? Like there's systems to solve for this, but for somebody who's new to crypto, and if we want to make this for a more generalized audience, we really can't be talking about networks or chains. Like, when we think about Glider, users want to invest in assets, right? We want to make that as streamlined as possible. They don't need to think about gas or signing or bridging or any of these things. And like, to quote some people that, we've talked to in the past, or like even Brian Armstrong has said this, like, you don't need to know how the oven works to use an oven, right? You don't need to know how a dishwasher works to use a dishwasher, right? It just works, right? And so like all of that plumbing, the gas, the bridging, and the signing, and all this stuff with custody is the inner workings, but you can still use the stove or still use the oven or still use the dishwasher. And I think that's the era that we're in now. And we're really starting to see the first set of applications that are going to push that more forward.
All right. Let's talk about Glider. So tell us how it started. What's the vision? And actually, what is Glider for those who are not familiar with it?
Yeah, I mean, Glider is an investment platform. Simple as that. You can think of us as Fidelity on chain or Vanguard on chain, but we give you all the superpowers that you get from direct ownership of your assets. So lending, staking, governance, like all of this utility for these direct ownership assets, like maybe it's a game and you need to hold your assets somewhere. Like That's what you get with Glider that you don't traditionally get in your, Robinhood or Coinbase account, even at this point. We add a layer of automation to it as well. So things that, traditionally are fairly annoying, like for example, claiming your rewards from a lending protocol and reinvesting them, are things that Glider can make really easy for you. And our whole goal here is just to grow the wealth of our users, right? Of course, you can trade any token on Glider, but our focus is on real assets, stocks, bonds, mortgages, credit, maybe real estate one day, like stuff that actually has real value that grows long term, that isn't just a peer-to-peer like pump and dump, right? There's plenty of places to go trade meme coins. Of course, we don't block that on our front end because we believe in fully permissionless systems, but there's real stuff on chain, and there's real stuff that I would argue a bigger audience in the world actually wants to do, right? How many people actually want to go and trade meme coins? We've got that, and there's lots of places to do it. How many people actually want to hold NVIDIA on chain? I would argue that that is a massive population around the world. And for us in the US and you in Canada, like access to these things is not too hard already. But when you think about global access around like Asia or Africa, like even getting access to the stock is hard. And so putting that stock on chain makes it really easy. So yeah, long story short, we are an investment platform. We solely focus on investing, and then we add all of the superpowers that you get from being on chain in a fully Web2-like experience. So all of those things that I mentioned of gas, signing, and bridging, they don't exist, or they don't need to exist, right? You don't need to know that they're there. And yeah, that's really the vision. Like we think that there's a incredible amount of people who will want better investment products, and we're here to beat all of the traditional fintechs because they're not on chain.
All right, kudos to that. You at one point you like we saw on Shane or online actually that you criticized projects that launch tokens too early, or at least like some projects actually their only goal is to launch the token without like a product underneath. So tell us about like how you approach that aspect. What's your take on like tokens in general for startups or small companies, and why is it important according to you to wait until you have some PMF before launching a token?
Yeah, there's so much that goes into launching a token, and of course, we've spent a lot of time thinking about it ourselves. You can either launch a token really, really, really early, meaning like pre-product. I think there is some backing to that, but of course, you have to do a lot of vetting of the team and stuff like that. The other option is you wait a long time, or you find product market fit and you feel like you have an existing product that will work well, and then you launch a token. The most important thing, though, about a token is that you need to be able to provide long-term value to the investors in that token. And that's what we're really lacking today in crypto, right? Like, you can't just launch a token and be like, it's a meme coin. Like, that's not how you build a long-term sustainable token. Buyback and burn is great. I think that's a really simple mechanism to take the revenue that you generate as an application and put it back into the token. What I would like to see on the regulatory front, though, is a way to pay out, dividends or staking that's not, or like more direct to the user over time, because that's what's going to make things interesting. And so, yeah, I think we've seen a really, really poor selection of tokens hit the market over the past couple months, and everything has gone straight down. First and foremost, we want to build a product that people can grow their wealth on. Secondary, there will be a token at some point, right? And ensuring that there's a product that can support that token with actual revenue, like a real company would, that's important, right? Your ICO is just like an IPO, right? Like we take it that seriously, and needs to have that same sort of level of build up and partners that are going to help make it a success. And so getting to that point is a long journey, and shouldn't be taken like lightly.
I tend to agree with that. Like I've seen all kinds of waves of treating tokens, and lately I'm firmly convinced that tokens should be treated like equity in the end. If we want to be serious, like yes, there will be meme coins, there will be like tokens, like very speculative, but those are for degens. But for most people, for normal people, I think tokens should be built as equities and with real utility, with real tie to a real company that it should be generating revenue at least, or having a plan to generate revenue, not just like, hey, like buy my tokens, gonna go to the moon. Trust me, bro. That
Yeah,
will not work anymore, right?
doesn't work anymore.
Um,
It doesn't work anymore. The problem is regulation needs to catch up. Like quite honestly, the regulation in the US is really far behind. It's actually maybe further ahead in Europe and certainly further ahead in Asia. And so I'm not a regulatory expert, but the Clarity Bill doesn't seem to be getting passed in the US. Um, Look, I don't think crypto should be I think crypto should be bipartisan, right? Like I think if the US wants to be positioned like we are for AI to be the next future, we should also think of crypto in that same bucket. Now, of
mm,
course, I'm not at the level where I'm in those conversations. So, the people like the Coinbases and the Robinhoods of the world are fighting the hard fight for us.
yeah, yeah. I also believe that it should be bipartisan, but there are some people on the wrong side of history, I believe, because they've been fighting against crypto as if it was only for scammers and money launderers. There is that. We can't say there's nothing like that. But I think cash is the biggest asset for money launderers, and we're not saying let's forbid cash, right? That's a different story. But back to Glider, you mentioned at one point that the emergence of L2s, account abstraction, were like catalysts for the emergence of Glider as a company and as a product. Is there any other technology that you're excited about for the future, for the next few months and years, where you'd be betting on from a maybe yeah, from a crypto perspective and a technology perspective.
I think we've become fairly mature in the crypto side of things. I think we're getting this sort of like traditional finance push into what feels like private blockchains. Um, Private blockchains are okay, but they really need to be composable with all of the stuff that we've built already. So, like for example, like the New York Stock Exchange, if they're going to launch a private blockchain, is that compatible with Aave? Like I would hope so, like and so privacy is interesting. I'm not a privacy expert by any means, but how do you blend the world of privacy with open protocols and do that in a really nice way? I think that's important. We do some special stuff on Glider's side that's relate to like ZK stuff. So, for example, when you connect your X on Glider, users don't need to know this, but we think it's cool. Like when you connect your X, we're actually using a provider called VLayer to do a ZK proof of ownership of your X account. And so you actually don't, give Glider um, any like information about your X when you do connect your X, which is really cool. Now users don't need to know that, but again, that's cool. So I don't know if there's a lot on the horizon. I think the next sort of year or two is about how does fintech and crypto merge? How do we make these things accessible to normal people, and what does that look like? I think the technology layer, like infra, is more or less built to what we need for applications.
All right. What's the biggest risk?
I mean, the biggest risk is these private blockchains. I think everyone should be very weary of this because, it's not just us talking about it. It's many people talking about corporate chains, right? Like, Tempo and Arc, and now the New York Stock Exchange. Like, is all of the stuff that we've built around Aave and Morpho and stuff like that, is it relevant to these, incumbents that want to come in and build their own sort of pseudo blockchains, pseudo centralized chains? That's really what keeps me up at night, right? Like, I would like to argue that we haven't built all this stuff in open, transparent systems for nothing. I also would like to see like what's the value of doing a private blockchain if not for the interoperability of lending protocols and permissionless rails. So I think that's yet to be seen. I think we all agree, whether you're a private blockchain or not, that the future is tokenization. So that's really exciting. Everyone agrees with that. Now, BlackRock, for example, said everything's going to be tokenized. but we're going to do it on a private blockchain. That sort of caveat that they've now sort of carved into it does worry me. But let's see. I don't think they're going to move very fast. They never do, right? All these big institutions don't move that fast. And so I think it's more up to us on the sort of crypto native side to shape what that should look like and then advise them and consult them about how this is the future and how it's a better system. And ultimately, a better system should win.
Yeah, I tend to agree with that. Like I also see it as a big risk because they do have this vision of like working in their own silo and protecting their boundaries. But I think they will get to the conclusion very fast that you need to break those silos. You need interoperability and composability if you want to really grow and interact with the others. Same as it is kind of almost the case in TradFi, although there are silos that are kind of, I would say, country silos, country level, because there are regulations. And that evolves very slowly. Regulators are dinosaurs, and thinking that there will be like a global regulation type of thing that will regulate everything, we're very far from that. So that's potentially the big issue here, or the elephant in the room, if we think that there will be something that will be the same from the US to Canada to Europe to Asia to South America and Africa. Only DeFi is that for now, and these big corporations will always fight against it because obviously they will lose those flows, right? We'll see how it evolves because we never thought that they will actually adopt crypto. Now they're almost hijacking crypto, so we'll see how that evolves.
Yep. Yep. And you see them hiring too. You know, they're all hiring blockchain roles and crypto
Yep.
roles. So.
Yeah. All right. So beyond finance and technology, what big ideas are you thinking about or kind of keep you excited or keep you worried at night?
I mean, how can you not talk about AI? That is what everyone is talking about, especially if you're in San Francisco. It's consuming everything. And so yeah, I think how does crypto tie into AI is really important. Crypto is digital money. It is, you know, how you can value something that is virtual. And so like even with like molt bots, right, for example, right, like I think there was a lot of like science fiction fear about like molt bots coming and like doing a bunch of stuff and taking over the world. But like in my mind, I'm thinking like, okay, but like, does it have money? Can it go and do things? And of
Mm,
course, crypto is that sort of money for it. But like, if you can like economically constrain your, you know, molt bots, then can it go and do things, right? And so like this idea that like internet value and money is going to be sort of like tied into maybe like proof of personhood or like how much they can actually go and get done, I think is really important because without money, you can't do much as a bot or an agent. You know what I mean? And so that's exciting. You know, we think about how does AI play a role in managing wealth. We see a lot of this in the traditional fintech side, like how can it be a better advisor, more customized, more personalized? That's something we think we can do even better because we are on chain. And so how do you provide a personalized wealth experience or, you know, what you might pay a wealth advisor for today and at scale and better, I would argue better than your traditional wealth advisor? That's exciting. But yeah, there's sort of so many intersections of crypto and AI that I think are yet to be explored. And we'll see what comes of it. There's a lot of hype, and I would be mindful to avoid hype. Like there's so many things that are like, oh, my agent's gonna go and trade for me, and like that is not real, guys. Like you need to recognize the fact that if your agent is gonna go trade for you and make money, that's called a trading firm. Like that is not. There is no reason for me to ever create a bot or an agent that will actually go and make you money because I would keep it for myself and I would make a firm and I would raise a bunch of money and I would just have the bot manage that money. And so don't fall for the hype, I would say. And it does bother me a bit when I see the hype getting a lot of eyes and stuff. You know, oh, I'll give ChatGPT money and let's see how it trades for a week. Like, I'll tell you right now, like it's gonna look like the S&P 500. Like it's not gonna, at best, right? It's or it'll magically outperform with some like lucky, stock pick that it did. But if you've seen a lot of these experiments over the past couple years, you know that vast majority of them are just random noise. And so, yeah, I guess to answer your question, like real uses of AI in crypto and not this hype is what is sort of exciting outside of crypto.
All right. I tend to kind of share that vision. I think AI is here to stay and it's going to change everything we do in life, including how we interact with the blockchain. I also think that AI agents like need blockchain. They need the DeFi side of things to transact between each other and with humans. I'm one of those who believe that there will be more transactions done by AI agents than humans in the near future. At least I might be hopeful for that, but we'll see how the future, what the future reserves to us. In all cases, this has been a very, very interesting and very fun episode of Founders Podcast. Thank you so much for joining and sharing your vision, your journey. And do you have any final words or any alpha to share about Glider or anything to share with the audience before we wrap up?
Yeah, over the coming weeks on Glider, we're going to be launching some new chains. This is interesting because now you can take your assets that might be on other chains and also house them into a fully fledged and fully dedicated investment platform where you can just manage your wealth for the long term. Check us out on glider.fi, and you can follow us on X and sort of all the usual channels. We're incredibly global, so if you're not based in the US or Canada, I'll tell you this, like the majority of our users are around the world, not in these countries, and so it's important to recognize that crypto is super global. And we're really excited to see people tweet about us in Chinese and Japanese and like all of these different languages that Russian, like we would have never imagined. And so yeah, it's cool to see, and we're still very early in our journey. There's a lot more to come. Yeah, look, give us some feedback, give us a try, get in there, and we'd like to see that you can grow your wealth for the long term.
All right. Thank you so much, Brian, for joining. As I said, this was really fun. And to our audience, obviously, thank you so much for listening to us. And we'll see you in the next episode. And obviously, give Glider a try, and you'll see by yourself how the user experience is easy and how you can have access to all these assets, but on chain. Thanks so much, Brian. And I'm wishing you a bright future and for the whole Glider team as well. Thanks.
Thanks for having me.